Good afternoon, all of you. On behalf of the Professional Development Committee and the Western India Regional Council, the Institute of Cost Accountants of India, I welcome all of you for the webinar series on Cost Audit Gyana Satra. Our today is our fourth session on steel industry. Our speaker, CMA C. Leela Srinivas sir. I welcome sir. He is presently working as a Deputy General Manager F&A in Rashtriya Ispat Nigam Limited, Visakhapatnam Steel Plant, Visakhapatnam, Andhra Pradesh. He had his MBA from Dr. B.R. Ambedkar Open University, Hyderabad. He has rich experience of about 35 years in public sector steel manufacturing company in the areas of accounting and costing. He dealt many sections in finance and accounts department like store accounts, branch accounts, operation bill processing, corporate accounts, costing, budget section. He is a part of many committees of the company for designing the procedures, orders in various areas of accounting. He was the bridge for system migration from COBOL to Oracle and from Oracle to ERP or SAP. He was functional consultant for CO module as core team members in implementing ERP SAP in RINL. He was also functional consultant for treasury operations of ERP SAP in RINL. He has also successfully implemented ERP SAP on 1st May 2014. He trained about 150 end users and CNAG auditor, CAG auditors in FICO module. He is an expert in solving material ledgers issue in SAP and solved many issues cropped during the stabilization period. He also won special performance awards on various process improvements in the field of costing. He was a Jawaharlal Nehru Award winner for the year 2006 to 2007, an internal award for his continuous outstanding contributions in the company. He is developing logics for various reports for the cost accounting records and reports for steel manufacturing are his favorite area of work. He is presently looking after costing and budget section in RINL and instrumental in RINL being placed at first position under Mega PSU category for efficient cost management for 2 consecutive years, 17 and 18 awards by ICMAI. He is active in serving the CMA profession and was chairman of Ukungram chapters of cost accountants. I welcome sir and request sir to kindly start the session, sir, please.
Thank you, madam, for a nice introduction. Can I share my presentation here?
Your video is not working. Right click on right click எப்படி தானா வேணும் அப்படின்னு தெரியுது மவுஸ்ல போலாம் பார்க்குறேன் சவுண்ட் ஏதாவது கட் ஆயிருக்கா சவுண்ட் ஆஃப் இது கேமரா.
Madam, please allow me to share my desktop.
Yes, sir. Yes, sir. Yes, sir. Sir, you are presenter, sir. You can share, sir.
Team needs permission to access to the camera. You know, recording and
Yeah, just come.
sound or
Good evening, my dear fellow cost and management accountants. Really, it's my. Am I audible?
Yes, sir. Yes, sir. You are audible, sir. Or also, PPT is visible, sir.
Okay. Really, it is my privilege to be in front of you as speaker for today's webinar. First of all, I would like to thank respected CMA Mihir Vyas, Chairman of WIRC, and CMA Nanti Shah, Vice Chairman of WIRC, and CMA Chaitanya Mohir, Secretary WIRC, and CMA Arindam Goswami, Treasurer and Professional Development Committee of WIRC, ICMAI. I thank you all, sir, for giving me the opportunity to act as speaker for Session 5, Steel Industry under Cost Audit Series, Gyana Satra. I personally appreciate the WIRC for conducting the cost audit series on different industries. This will definitely help the knowledge sharing or transfer among professionals. Knowledge sharing and transfer of knowledge. Dear CMS, this is my second time delivering on the same topic. I request all the participants to please note down the queries as and when comes across during the presentation. I will reply in Q&A session. In case if I don't give the convincing reply to you, please send me the query to my mail ID, which is shown in the presentation, and I will reply personally after this webinar is over. Your queries will help me as a refresher. My plan of presentation is like this. First, before going into the cost audit report and record rules, first let us understand how the iron and steel manufacturing process will be, and steel costing process in ERP and SAP, how it will be, and then we will come to company's cost records and audit rules for steel industry. Then Q&A chat box session. And this is my Gmail mail ID and WhatsApp number. Before going into steel manufacturing process, I just want to give a small brief about the steel industry. Establishing a steel manufacturing unit requires a lot of capital in the form of fund and land. It's a capital intense industry. For establishing 1 million tons of steel, we require approximately 3,000 crores in the form of fund and 1,000 acres of land. World steel production is roughly 1,884 million tons in 2024. China is the largest steel producer, produces over 1,005 million tons, followed by India with 150 million tons. There is a huge gap of 850 million tons capacity between China and India. And Japan is the third largest producer. They produce around 84 million tons, and US is the fourth, which produces 80 million tons. Per capita finished steel consumption in 2024 was 214 crores for the world as a whole, and 601 kgs for China. And per capita consumption for India is about 103 kgs. Price regulation of iron and steel was abolished in 16th January 1992. Since then, domestic steel producers are determined by the interplay of the market forces. That means market, whatever it can absorb the price, to that only they have to sell. Domestic steel prices are influenced by trends in raw material prices, demand supply conditions in the market, and international price trends, among others. Steep rise in steel prices in 2021-22, rise of raw material prices. Basic raw material for steel manufacturing is coal, coking coal and iron ore. And that coking coal in 2021-22, it has suddenly gone up from $100 to $600 within a span of 4 months. So there the steel prices have gone up because of this. Some companies have taken shutdown of their operations for capital repairs during that period, and some have throttled production to come out from working capital pressures. As a facilitator, the government monitors the steel market conditions and adopts fiscal and other policy measures based on its assessment. Government of India has notified National Steel Policy 2017, which I think they are going to revise it. which envisages a development of technologically advanced and globally competitive steel industry that provides environment for attaining self-sufficiency in steel production by providing policy support and guidance to steel producers. National Steel Policy 2017 also envisages by 2030-31, India has to enhance its crude steel production by 300 million tons and per capita consumption is 158 kgs. Presently, India's per capita consumption is around 100 kgs. Basic raw material required for steel making is coking coal. For each ton of steel, 1 ton of coking coal is required roughly. And iron ore, for each ton of steel, 1.6 to 1.7 tons of iron ore is required for making 1 ton of steel. The variable cost of steel is around 80% is variable and balance 20% is fixed cost. Out of 80% variable cost, coking coal and boiler coal is around 52% and iron ore is 33%. And fluxes and other materials consists of limestone, dolomite, ferroalloys, manganese ore, aluminum and petrocoke altogether is 5% and other operating variable costs like consumables, refractories, water and all, it is around 10%. So about 60% is represented by total out of the total cost of 100%, 66 to 70% is only coking coal and iron ore. So with this background, let us start and understand how steel manufacturing is done. Now the first process of steel making is coke. Coke is as I told you, coke is a major raw material for steel making. Coke is used for melting the ore, iron ore. This coke, coke is uh, how coke is made is the conversion of bituminous coal to coke takes place by process of carbonization, which consists of heating coal over almost 1100 to 1200 degrees centigrade in a closed chamber in the absence of air in vertical coke ovens. Coke is hard and porous mass. Approximately 15 to 17 hours required for each pushing. In one pushing, there will be around 19.6 meter length battery. In one pushing, around 19.5 tons of coke will be manufactured. And it takes, once it start, coking coal, once it is loaded into the battery, it takes around 15 to 17 hours to convert it into coke. And while converting it into coke, the raw coke oven gas will be released as a byproduct, and crude benzol, crude tar, and ammonia are the byproducts, while coke is the main product. And again, coke is sorted into BF coke, nut coke, and coke bridge and coke dust based on the size of the material. And during this process, the heat, the 40 atta steam is collected in a coke dry cooling plant and is used for generating electricity through back pressure turbine system. It has gone. Hello?
Yes, sir.
My Yes. And from the gas generated, from the steam generated in coke dry cooling plant, we generate electricity through back pressure turbine system. And the good quality of coke consists of more than
So
85%.
the PPT is not visible.
PPT
PPT
is
is
not
just
visible.
Sir, PPT is not visible, sir.
1 minute, 1 minute. That is what I also got some doubt. Madam, Pujanka
Yes, sir.
madam, you have to, I am not able to share this one.
हाँ sir, we can't view your PPT.
Yeah, it has come now, I think. Now, okay?
Now it is
Now it
okay.
is
Now it's
visible?
visible, sir.
yes. Now you have to
Now it is
put
visible?
it in presentation mode. Yeah, okay now.
Okay, no?
Now it is okay, sir.
Yes.
Okay.
Yes, it's
Yes.
visible,
Okay
sir.
now.
Right. Then the good quality of coke will have more than 85% fixed carbon will be there, and less than 10% ash content will be there, and 2% volatile material will be there, and 0.6 to 1.5% sulfur will be there, and 0.05% phosphorus will be there. Roughly 1.8 tons of coal is required for producing 1 ton of coke. Out of that, actually in India, all the coke is made from the imported coke only, because in Indian coking coal, there will be huge ash content will be there. Ash content will be more than 16 to 17% ash content will be there. Then the coke which manufactured out of the Indian coal will be costly. That is why we import hard coking coal and soft coking coal from Australia and US, and now we are importing even from Russia. This is blended in 55% hard coking coal and 40% soft coking coal and 5% indigenous coal, which is available in India. So for each ton of coke, we require around 1.8 tons of coking coal. So coke acts as a fuel to heat the iron ore through endothermic chemical reactions and melting the metal and slag. This is the while manufacturing coke, we generate a lot of byproducts. That is why the main process will be called coke ovens and coal chemical plant. This coal chemical plant, this is the raw gas which is generated while producing coke, blast furnace coke. It gives clean CO gas and crude tar and ammonia. From ammonia, we manufacture ammonia sulfate, which is used as a fertilizer. And this clean CO gas is used in the subsequent processes as a fuel for in the furnaces like mills. Again, steel will be manufactured from liquid state to hard state, that is blooms and all. Again, those blooms will be converted into finished products. During that finished products, the fuel is required. That fuel is this CO gas used for that as a fuel for the furnaces in the subsequent processes. And crude tar, from crude tar, pitch will be manufactured, and from pitch creosote mixture and medium hard pitch and blast furnace pitch. And from there, naphthalene fraction. From naphthalene fraction, it is naphthalene balls and DN oil will be made, and coal tar wash oil and phenol. And these are all saleable byproducts. And from the crude benzene, you know all what is benzene. and toluene and light solvent oil and all. These are all chemical industry. The actually in earlier these when steel was not steel in 2011, before 2011, steel was not for cost audit. But these chemicals, these benzene toluene were the for chemical industry. These were we were maintaining cost records for this part. Then the next part is from one requirement is coke for making for melting iron ore into liquid state. We require coke. That coke manufacturing we have seen. Now this is sinter. Sinter, how it is prepared. There are two processes in this. One is base mix preparation and sinter making. In the base mix preparation, base mix is prepared using iron ore fines, iron ore slime, and whatever in the previous process returns will be there, sinter returns and metallurgical waste, and limestone is fluxes we say, dolomite and coke bridge. So the shape of the iron ore will be like this, and fluxes shape will be like this. And from the base mix, sinter is made. And sinter returns and size returns, again it will be used in the base mix. So the shape of the sinter will be like this. And in the iron ore, it is called hematite, and this one, the chemical name is Fe203. It contains 70% of ferrous and 30% of oxygen. These iron ore fines are there, no? Which are the basic raw material. This contains around 64% of Fe content. And iron ore slime, it is containing 60% of iron ore content. And from the 1 ton of base mix, 1.1 to 1.2 tons of base mix is required for sinter. Then in the sinter, the Fe content will be around 56%. So iron ore starts melting at around 1100 to 1150 degrees centigrade. This is the blast furnace. Iron ore and coke, two major components which are poured into the furnace through these bins. Iron ore and coke and limestone is conveyed to the top of the furnace. From the furnace, here it will be poured. And the charge is stored in bells until the timing is right for charge to be dropped into the furnace. From the top, the coke and iron ore will be poured, and they will be waiting here till the furnace is reaches the required temperature. The hot air is then blown through the pipes called tuyers. These are the tuyers. From down they will give the hot air, and from top raw material will be poured. And the coke burns to increase the temperature in the furnace up to 1700 degrees centigrade. Inside it will be around 1700 degrees. And the limestone attracts the impurities. Why limestone is charged? It attracts the impurities in the iron ore in the form of slag and become fully liquid at 1350 to 1400. The slag is lighter than the molten iron. So slag will be on the top side and molten iron will be on the below the slag. Then the furnace, when the furnace fills, first they will take off the slag under on the top of as a layer. It will be there on the iron hot metal. Then the slag will be tapped at regular intervals. It is taken out from these things. Then most of the iron is taken straight from the blast furnace to steel. The next process we will see in the next process. Whatever manufactured in the blast furnace, it is called hot metal. Many of the steel plants our capacity is measured at hot metal stage. Our Rashtriya Ispat Nigam Limited is the capacity of Visakhapatnam steel plant is around 7.5 million tons. That means 75 lakh tons. Then the hot metal, what is manufactured in hot metal, some portion will go to pig iron and some portion will go to SMS. SMS means steel melting shops. Again, here oxygen enrichment will be there, and ferroalloys and aluminum are added to the hot metal to make a grade wise steel. Grade means suppose IS 2062, IS 7887, high carbon steel and special steels. That is that for getting those grades, the ferroalloys component and aluminum are the major. To convert into a grades, the chemical composition of these things are very, very important. From there, liquid steel will be manufactured, and the output of liquid steel again will go to CCD. CCD means continuous casting departments. So from the liquid steel, the crude steel will be made. Crude steel means blooms billets. Thereafter, in RNL, the bloom sizes are 320 into 250 and 250 into 250 are the in old SMS1 CCD, and in the new SMS2 the bloom sizes are 150 into 150 and 200 into 200. So from the 200 to blooms, this bar mill, WRM means wire rod mills and structurals. These will be manufactured. So here you can see these are the wire rods. These are the bars which we use in construction of houses. Excuse me. From there, the re-rollers will take, and the final products like nails and fan rods, all those things will be manufactured. And these construction materials are used in constructing bridges, roads, and all. This is a steel major steel products. And for establishing a steel plant, only steel making is not the only thing. It requires a lot of power consumption. Around 5,000 rupees per ton of in terms of units, around 600 to 700 units of power is required for making each ton of steel. So we have captive power generations. One thermal power plant is there, which is 315 megawatt hours boilers. It can produce 315 megawatt hours. And gas-based power plant, which the waste gas comes from the blast furnace, we can convert into power. And BPTS, as I told you, in the coke ovens, it will come from the coke oven waste gas. And the GETS and TRT are the waste gases generated from the blast furnace. From there, we manufacture power, and it will be used in the process. Steel making requires continuous supply of power, as heavy equipments are have to run without hampering the production. So in case of failure, external power is also we purchase from the electricity board. That is one part, power. And a lot of oxygen and nitrogen organs are required for this heating purposes, and oxygen enrichment in the central steel melting shops. So for that, we have air separation plants. And the another utility is compressed air and chilled water plants for cooling purposes. Because the steel comes with 1700 degrees centigrade, the hot metal is manufactured, and blooms also again will be reheated and converted into finished product, which requires a lot of water for cooling purposes. And soft water and DM water, it is used in the steam generation. These are all the utilities parts. Then there are many ancillary and service centers are there in manufacture in steel plants. The production services are energy management, environment management, production planning, and quality assurance and technology, roles and role shops. Why we need to know about the steel process, steel making process is, though the topic is cost audit, we need to know all these parts of steel manufacturing plant, because the cost incurred at these levels have to be ascertained, and the cost of production of steel will be determined. So the parts, these are all the main cost collectors, we can say. The production planning and monitoring, and quality assurance and technology, and roles in role shop, raw material management, raw material handling plant, structural engineering, all this. And some maintenance services are also there, like air conditioning services, civil engineering, structural, all these things. So the cost of all these things will form part of works cost. So with that, the process of steel is over. Now, steel costing process in ERP. So now, are you all with me?
Sir, could you please tell me how
Yes.
the production cost centers cost being ascertained, how on what basis it is getting apportioned to various products?
Yes.
The
Can
methodology
we
that you are using it.
can we pause it and let us do it in Q&A?
Yeah, thank you.
Production cost centers cost, how we are ascertaining to each product, isn't it?
No, my question is, for you have so much of production cost centers, how
Yes.
the cost being accumulated and how it is apportioned to various products. What
That is what.
exact methodology that you are using?
Yes. Once, if you, in the next part, if you see steel costing process in ERP SAP, I think your doubt will be cleared.
Okay.
Right? Now we are using ERP SAP for the costing process. So ERP, let us know something about ERP. Integrates is a set of IT systems so that employees can make enterprise-wide decisions by viewing enterprise-wide information on all business operations. And the key word is enterprise. It means whatever data is there at enterprise level, it will be one and the same. So there won't be any duplication of data entry. And enterprise as a whole, one data will be there. So ERP systems focus on all processes, departments, and operations for the entire enterprise. And ERP systems correlates the data and generate an enterprise-wide view that is consistent and real-time. Notifications are coming. And it is involved in sourcing, producing, and delivering a company's product. It is right from procurement and production and selling. And major components focused in ERP is accounting, finance, and controlling, FICO module we say, and production, PP module we say, and materials management, MM, and HR, and selling and distribution. These are the modules in SAP. And extended components typically focus on and require interactions with customer. That means customer relations and supplier relationship management. Then these are all internet-based operations. And next version of ECC is presently we are using ECC. Next version is HANA, which is on cloud basis. And the configurations what we make in SAP is company code. For each company, one company code will be there. And for the controlling module, it is called controlling area. And operating concern is the concern. In controlling area, many operating concerns will be there. And plant is a place where your stock will be, your inventory will be valued. And sales office is from where sales are made. And house bank is a bank account. Suppose in SBI I have 4-5 accounts. Then each account will be a house bank. And depreciation keys are the assets which are there. For that, at what rate of depreciation will be charged? It is based on the life of the asset. They will be configured as depreciation keys. And OBYC settings means there is no abbreviation for this. OBYC, it is a standard T code. We say T code in SAP. These are very important. See, once after implementation of ERP, many people will forget about what is how debit entry, how it is made, and credit entry, how it is made, because of this OBYC settings. See, when I procure material, when I receive a material in the stores, what is the accounting entry passed? Can anybody tell? Hello? Hello?
Inventory account will be debit and GRIR will be credit.
Hello? Not in SAP, I am telling. What is the accounting entry passed? When I receive material in stores,
Generally, will debit to
Material
the
will be
inventory and
debited.
credit to the vendor account. And
Debit-
tax will be debit to the
No.
input tax. Will be vendor.
okay. Debit will be to inventory,
And taxes, input taxes also will be get to debit. And
Debited?
credit to the vendor account.
credit to
Vendor account.
vendor account.
40
So,
supplier.
vendor or
Both
supplier,
are-
whoever
both are.
it is. That is okay. But after some time, you will forget that entry, because whenever you make a transaction in Migo in SAP, background entry will be passed by the stores in charge or whoever is receiving material. The accountant is not passing that entry. But in normal course,
Those person will be enter the entry in Migo and
whenever you
our accounting team will be do in Miro. MIRO.
No. That's what. But before that itself, financial accounting entry is passed in the system.
It is created like
It is not made by finance department or accountant. It is done by somebody else. The stores in charge or storekeeper has passed that entry.
Okay, that is GRIR liability account will be created.
Yeah. Inventory is debited. No, inventory is a current asset.
Credit to the
Inventory is
GRIR.
debited.
GRIR it will be credit. Whenever pass the
Inventory
IR,
debit, GRIR credit.
Okay.
And when Myra is made, GRIR will be debited and vendor will be credited.
Debit to the vendor account. Okay.
Vendor account will be. So this is because of these settings. Whenever whoever are using SAP, they will be losing their accounting treatments. That is what I mean to convey. These OBYC settings means for each moment type, for each transaction, there will what is the debit account rate and what is the credit account rate. It is already decided. It is configured in the system. So when you do a transaction, background accounting entry will be passed based on these OBYC settings.
Okay, sir.
Please
based on
give one
material,
example.
we post automatically.
One example, please.
This one, na OBYC settings, na. That
yes,
is what
one example.
Whenever Migo is made, Migo means in SAP goods receipt.
Migo.
Right? Migo, MIGO. That is a transaction code.
MIG.
Don't ask me the abbreviation of that. It is only a transaction code. In SAP, it is called. It is only based on the T codes. We say transaction codes. For
Okay.
transaction code MIGO, the accounting entry background is configured as inventory of a particular material. Each material is assigned with a valuation class, and each valuation class is defined in OBYC settings. What is the debit and what is the credit when a goods receipt is made for that. When issue is made, what is the accounting entry? It is already decided in OBYC settings. So whenever MIGO transaction is happened in SAP, the corresponding material account product code based on the valuation class, the inventory of the respective inventory will be debited and credit will be to GRIR clearing account. Right, it is an intermediary account, GRIR clearing account. Vendor will not be credited at that point of time. Right? And when MIRO happens, when invoice has come to finance department, and they will make the invoice verification. That is done in MIRO transaction. When MIRO happens, the GRIR clearing account will be debited and vendor account will be credited. So GRIR at MIGO stage and GRIR account at MIRO stage will be nullified.
Okay.
Right, sir?
Okay, right. Sir.
Yes. So these are the T codes I told you, no? For general account posting, like some expenditure has to be done, some expenses debit and some bank account credit, all those things. These GL accounts will be F-02 is the T code for that. And ME21 is for creating purchase order in MM module. And MIGO, this is already I have explained, goods receipt against PO, and MIRO for incoming invoice against PO. And FB60 is direct vendor without without purchase order. Direct if you are purchasing emergency purchases from a local vendor, then there won't be any purchase order and you have gone to market and purchased and you want to account that in your system. Then FB60 will be used and vendor account will be debited and cash account will be credited. Initially, the expenditure will be debited and vendor account will be credited in FB60. And while making payment in F-53, vendor account will be debited and check issue clearing account will be credited. Right? And in HANA, any question?
No, sir.
Yeah, in HANA, the higher version of ECC, it won't, we don't need to memorize these transaction codes. Only icons will be there, like folder names will be there. If you click on folder, it will be automatically, you will be taken for, you will be allowed for doing the transactions. So this entry already somebody asked, explained. Whenever a user performs a transaction code, if an accounting entry is generated, the relevant FICO records are updated based on accounting document and controlling document. MIGO used for goods receipt, accounting entries, inventory debit and GRIR account credit. And MIRO used for incoming invoice, accounting entries, GRIR debit and vendor account will be credited.
Sir, in HANA and ERP, only security purpose is the difference. Main difference is security purpose, na? HANA, use of HANA and ERP.
No. It is like a higher version. How iPhone 13 and iPhone 16, what is the difference? It is only higher version, that's all.
Okay. No, you told na, that is HANA is cloud.
Yes, cloud-based. It is cloud-based. It is an internet-based. Local servers will be there for. Local servers will be there.
HANA will be more secure, na? One cannot hack. in HANA,
We
one
cannot say
cannot
now
hack,
hacking
it
is hacking can be done by for anything.
Okay.
See,
Hmm.
hackers are more intelligent than the normal persons.
Okay, sir. Hmm. Okay, sir. Thank you.
Right. Then comes to controlling. The main for cost accountants, we need to focus on the controlling module in SAP. Controlling deals with management accounting, which is an internal and integrated accounting in an organization. And internal accounting consists of cost element account and cost center accounting and product costing and profitability analysis. The product costing includes accounting of cost against production orders. Somebody asked me about how each product cost, how it is collected to production products, each products. So please concentrate on this, sir. Product costing includes cost accounting of costs against each production orders. Materials related cost elements are posted to production orders and other cost elements are posted to cost centers. Anybody has any doubt in this? Suppose I want to produce BF Coke. What we thought, what are all the hot metal, let us say. So what are all the basic inputs I told you? Coke and sinter, right? For making hot metal. So the the coke consumption and iron ore consumption will be booked in the production order of hot metal. It means that materials related cost elements are posted to production orders and other cost elements are posted to cost centers. Suppose that is the material. Coke and sinter are the materials for production of hot metal. The other cost elements are what? The salaries, repair and maintenance, and power and fuel, all those things. Those things are booked to production order of the blast furnace, which in which the hot metal is produced. The cost center costs are transferred to cost objects like cost centers, production orders, internal orders, WBS elements based on statistical key figures.
Can you elaborate much more on
Sir,
statistical key figures?
Yeah, statistical key figures are, suppose a cost center is there, a service cost center is there. Suppose, for example, water management department, right? Water management department, what are the costs of water management department? The raw water we purchase, that is one cost element, and the salaries and wages of the water management department, which maintains the pumps and all, right? And the machinery depreciation used in the water management department and any repairs done in the repairs and maintenance done in the water management department. All those costs are related to water management department. But these services of the water management department are taken by all the production cost centers, because water is used in blast furnace, water is used in blast furnace, water is used in center plant, water is used in TPP, means utilities. So these costs are collected in one water management department, and the receivers of the water management department services are based on some statistical key figure, means the water, how much they have consumed. Suppose I have someone I have serviced some 100 liters of water, right? Out of that
Got
100
it, sir.
liters, out of
The
that 100
expenses
liters,
are accumulated in a particular cost center,
Yes, which
Depending
is to be
upon the
apportioned.
various usage, it is apportioned.
Yes, the water
Got it.
consumed in different production cost centers and service cost centers.
Got it, sir.
That basis is the statistical key figure. Right?
Sir, in big concern like yours, can cost be possible day-wise calculation of cost per empty cost of finished goods?
Day-wise, it is very difficult, sir.
And
Sir,
it is calculated month-wise.
Month-wise, we are calculating.
So that means you are
Oh.
going by standard costing. Am I correct, sir?
Yes. Standard cost
Then
means.
variance also apportioned accordingly.
Yes.
Got
See,
it.
that we will come to that. The slides are there for that.
Okay, sir.
Right?
Right, sir.
The materials includes raw materials. ROH means what? In SAP, each material is given a group, material group we say. The standard metal group for raw material is ROH, and stores and spares ka ERSA, ERSA, and finished semi-finished goods SFG, and finished goods FG. It is called FERT, HALB, ROH, ERSA. Like that, grouping will be there. Right? Hello?
HALF is semi-finished goods. HALF is the semi-finished good.
HALB,
Nice.
HALB. Right? Then raw materials consumed for producing SFG and FG are directly charged to production orders. Like I told you, BF coke and sinter for making a hot metal, they will be booked under production order through bill of materials. See, in the beginning of the year, we do standard costing. What is standard costing? How we will estimate the standard cost? We will have a plan. So suppose for next year, we want to produce these many millions tons of hot metal. For that, how much coal is required, how much iron ore is required, how much limestone is required, all the materials will be estimated. And for producing 100 tons of hot metal, what will be the input? And what will be the output? And that output is going to where? So all these things will be defined in bill of materials. Right? So raw materials consumed for producing SFG, FG are directly charged to production orders through bill of materials. Then all raw material issues and utilities against each production orders as part of BOM. Production orders contain bill of materials and routing cost. That means cost center cost. In earlier slide, we have discussed about the salaries, repair and maintenance, depreciation, and power and fuel. All those things are booked under cost center activities, cost centers. And that cost and the material cost is the cost for producing a material. The conversion costs are allocated to production orders through routing of each production order. Inputs for routing are from activities of the cost centers. Right? Any doubt for this?
Actually, it is a continuation process, na sir. How you can determine the production order? What is the duration time for each
Yes.
order? How many orders created for one time?
Yeah. Coming.
And
For
one more
each-
doubt. Each orders contain output will become different shape of products. Different G within the
That's
same.
why. Now,
What will
with
be
my
about-
reply, your questions will be answered.
Yeah, okay. Thank you.
For each material, for each semi-finished good, for each finished good, for one product, we have one production order for 1 month. Got it?
Entire month it is taking only one production order.
Yes, one product. Suppose I want to manufacture 8 mm rebar. Right?
Okay.
8 mm rebar in the month of December will have a production order.
Okay. The entire month only one product only it will be manufactured.
No. Like that, I have around 400 to 500 production orders in a month.
Oh. Okay.
Right? And another thing is, whenever I'm suppose even in 8mm rebar, I have IS 1786 and I have IS 2062 and I have HC high carbon. So all the three, there are three different products. Right? For the three products, I have three production orders.
Okay.
Got it now?
Yes, yes, sir. Continue, sir.
Sir, only one submission here. The
Yes.
conversion costs are apportioned to production orders, not allocated to production orders.
Yeah. Production cost.
Apportioned is a correct word, not allocated.
Unabsorbed.
Yeah, I know. Conversion costs are apportioned to production orders.
How
That
it is?
Instead of allocated, it has to come as apportionment. Thank you.
No. What we do is, I'll tell you. Suppose in SMS1, I am manufacturing 100 products in a month. Right? I have, for each product requires some what do you say, heats, number of heats. The total conversion cost of SMS1 are apportioned to the products based on the number of heats produced in that month. Right? Suppose if it is in rolling mill, number of hours rolled for each product, the cost will be apportioned based on the number of hours. That is called activities. Based on the activities, the cost will be apportioned to conversion cost apportioned to the finished products.
What exactly the sanctity of using allocated here in the last conversion cost are allocated? What exactly the sanctity that you want to convey? Is it apportionment?
No. Allocated means suppose I have produced only two products in department. Suppose for a simplification, one product has consumed 100 hours of rolling time. Another product consumed 150 rolling hours in a month.
Based on some cost driver, the hour is a cost driver. Based on the cost driver, it is apportioned. Cost driver being hours. Thank you, sir.
Cost driver is hours only based. See, I have.
So whenever we use the cost driver, it is better to use the word apportionment. Thank you, sir.
Okay.
Sir, I have one small doubt. It is a continuation process. What is the time duration for get the 1 ton of material to raw material to convert to the FG? Is it 1 day or 2 days it will be taken?
No. It is based on the suppose I need for converting 1 ton of coke. I told you some 15 to some around 20 hours required for converting coal to coke.
Okay, say 1 day or 2 days.
And from coke again in blast furnace it requires some 7-8 hours.
Okay, sir. If it is in this case, if you maintain the production order for entire month only one order, how it will close the production order and transfer the TECO and completion of TECO and
every month in every month. We have a discipline in this one in our company. Every month, invariably, after taking suppose C shift production will be taken. Last day C shift production will be considered in the same month, right? So that is the cutoff period.
My opinion, it is at least 1 day or 2 days should we finish the production order and confirm the order, then we only can able to move to production finished goods and ready to sell. No? Otherwise, you can't.
No. That is no. No, the production order, see, production records will be automatically updated with the standard cost,
Okay.
right? Initial transactions will happen at standard cost. That will come.
And one
in
more,
the
actual costing also you are maintaining, sir. Actual costing.
Yeah. Actual cost will be after
for every month.
every month the
Yeah.
actual cost will be done.
Variances will be posting automatically.
Yes.
Okay, sir. Continue.
Hello.
Hello.
Sir, regarding the cost in the blast furnace, I presume that there will be so many number of charges.
No, in blast furnace it is tons, because
Okay. Blast furnace will have a capacity of so many tons.
yes. Based on the tons only we will allocate
Okay.
or a
And,
portion, whatever it is.
Let us say you are considering one production order which will run for say X number of charges.
Yes.
So in between the charges, the furnace will take some time to charge the raw material and heat.
That is the
So-
normal. Those are all normal for these operations.
Okay.
So those are normal for these operations. So
Ah.
whatever blast furnace cost center costs are there, I will apportion to production hot metal based on the number of tons it's produced.
Okay. Right, thanks.
Then how this is about a production order, and production order contains a sequence of operations, and each operation describes how to carry out a work step. Production order contains all the information required for producing targeted planned quantity of material. Production order determines the following: which materials are used and when they are used, which work centers assigned to cost centers, operations and sub operations are performed at work centers. Work centers are defined in PP, production planning. The dates when these operations are carried out, and the stock of materials, which stock of materials are required to carry out the operations. So which materials are and activities must be procured externally for the order, and receivers to which the actual cost can be settled. Suppose in the bill of material, one material is there in the bill of material, but that metal stock is not there. So in place of that, another stock is another material is used. So that is called unplanned material consumptions. So even that also it will allow, though it is not there in the bill of materials. Then the material consumptions for the output in a production order is defined in bill of material, and the activities required to produce the output materials are defined in routing. That means cost center costs. Cost of all bill of materials are posted to production orders on confirmation of their consumption against an output through material management module. And routing costs, activity costs from cost center are posted to production orders at standard cost for the actual quantity confirmed. And again, this standard cost, again, it will be revalued during the cost center assessments and all. And planned production orders are for the following purposes: to determine the planned costs for the materials being manufactured based on the planned lot size of the order, to calculate the planned variances and use them to decide what production order version to use, and to be able to determine the production variances at a later time. And whenever the production, that means GR or consumption, GI, and activity is confirmed against the production order, the same are valued at a standard price. So initially, when in the beginning of the financial year, based on the plan of the company, we calculate standard price for each product we produce and each material we procure. These standard price, with these standard prices, whenever transactions happens like GR or GI or something, initially it will be valued at a standard price, and then necessary entries are passed in FI to inventorize the production as well as to credit the activity cost center and to debit the production order.
Sir,
Anyone?
in how many? Hello, sir. Excuse me. In how many that duration the standard is changed in 2 monthly or how many months once it is reset standard?
Standard price is one. We are following for the entire year. One standard price will be there.
But in it is very much difference now month wise.
Month-wise difference will be there. That will that you
and
can
what
find
do
out
we
from
do
actual
about the
cost.
difference?
No. Month-wise will be there. That you will know from the actual cost.
Mhm.
Suppose if you are changing a standard price every month, every month means what you will say? Suppose April month cost will become the standard price for May, isn't it? Then
Yes, sir.
instead, April you can compare May actual cost with April.
Yes, sir.
The same one and the same. And the periodically the production order status is changed to TECO and delivery completed to enable to determine the actual routing cost for production orders. Adjustment on account of change in the cost from standard price to actual price are carried out in FI for the respective accounts in the inventory if the stock of the respective FG, SFG is available or to consumption, COGM and COGS as applicable.
Okay, sir.
Right. Then subsequent price differences of input materials as per BOM are also adjusted to FG, SFG and FG during material ledger process so that actual costs are determined for the particular period.
What exactly the advantage of maintaining standard price for overall year? Many companies are reviewing it on quarterly basis. Can you please tell me the advantage of maintaining on yearly basis?
Yes, sir. See, my accounting policy says I am using my raw materials and finished products on weighted average for the full year. See, my inventories are valued at yearly average price.
Okay.
So that is why even see standard cost regularly you change or monthly you change or yearly you change. That is only for an accounting entry for the at the time of transaction.
Okay.
Only we will be looking at actual cost or actual price only.
Okay.
You
Then
mean in MIS?
pardon, sir.
While calculating the standard costing in the initial of the starting of the year, have you considered based on the historic cost last year at weighted average, you will consider the price?
No.
That you have considered any inflation or estimated incremental or decremental of the price?
No. We have, as a public sector company, we have some plans. We have MOUs with the ministry.
Okay.
So suppose if they decide that this plant is to be operated at 90% capacity or 95% capacity, and we require this much of profit.
Okay.
So based on that, based on the market conditions and all, how much material is to be procured, at what rate, and how much production is to be done, and what are all the salaries and considering the retirements and all, we will back work.
There is a
And we will set up.
Planning price.
Yeah, we will set a plan.
Okay. Okay.
Sir, while calculating the pricing,
yes, sir.
Say now you told 90% capacity utilization or 80% capacity utilization. If at all any underutilized capacity, whether you will factor to cost or you will eliminate it.
Yes, sir. See, we have a this normal capacity and installed capacity cost accounting standard is there.
Yeah.
Based on that, based on that, India is too. Based on that, if I am going below the normal capacity,
okay,
then I will charge based on the normal capacity.
Fine. So there will be underutilization, if any, it will be recognized separately. It will be
Yes,
out of cost.
it is an unabsorbed cost.
Fine, got it.
That too, that is for only for fixed overheads only, not for fixed cost.
Yeah, yeah. Even the standard says only that, sir.
Yes, yes, yes. No, the auditor, the fixed cost, they will be confused. Sometimes they have raised even queries on us, even government auditors. On fixed costs, you have to absorb based on the normal capacity. We have argued that no, it is not fixed cost, it is only fixed overheads. Sir, then every period end on completion of FI entries for expenses, entries for stores consumptions, SES means service entry sheets for contracts, depreciation and all, cost center costs are posted and distributed wherever necessary. And assessment iterative cycles are run for transferring service center costs to production cost centers, and in turn production cost centers cost to activity cost centers. When I was studying CMA, there was matrix cost allocations. If anybody remembers that, not, I don't know. In costing paper, one matrix cost allocation. Suppose P1, P2 production cost centers, X1, X2, X3 are the service cost centers. P1, X1 services are used in P1, P2 and X2, X3. And X2 costs are used in X1, X3 and P1, P2. Like that, the one matrix will be there and costs will be allocated based on the matrix. The same thing happens in assessments, iterative cycles in SAP. See, water is consumed in power, water is consumed in blast furnace, and power is consumed in water. Like that. So these type of iterative cycles are there in SAP. It is very beautifully designed systems. And statistical key figures are the base for distributions and assessments. Statistical key figures we already discussed. And the costs so assessed in activity cost centers are divided with actual activity quantity units like tons, rolling hours, heats, and normal meter and megawatt hour, etc. to determine the actual activity rate per unit. And production orders are revalued with these actual activity rates. Earlier, when transaction happens, the activity rates are with planned rates, production orders are debited and cost centers are credited. When we determine the actual activity rates, then the plan rate and actual rate, the difference will be, the delta entry will be posted again to production orders. That is called reevaluation of activity rates. Then why we have implemented or what is the need for material ledger? Company want to evaluate inventories at a periodic weighted average. Somebody asked why there is a standard cost for year. Periodic average cost. Period means it is not till that accounting year. Suppose I am doing accounts for April to September. Then it is a periodic weighted average of 6 months. I am doing accounting for 9 months. Then 1st April to December. That is a periodic average cost. So we want always the average for the full accounting year. And company has a history of huge price differences and escalations paid subsequent to receipt or consumption. See, we have in steel industry, we have a JPC, Joint Plant Committee. Initially, based on the Joint Plant Committee allocations, the coals will be allocated to the different manufacturers like SAIL, Tata and RINL, all those things. And based on the allocations, it is only public sector, not private sector. Based on the allocations, the coal will be procured. The prices will be fixed after 2-3 months. Then how those price differences will be rolled up, considered for accounting. So for that purpose, we have implemented the material ledger because there is a price roll up in the material ledger. So initially transactions will be booked at standard cost. Then the price differences will be later months it will be rolled up to the products. And current prices for current consumptions will change due to these fluctuations. Company want to amortize these purchase and production variances over the life of the inventories. The company want to automate the process. Then metal ledger features are multiple valuation. Combine the benefits of standard price control for preliminary valuation and moving average price control for balance sheet, and enable accurate periodic valuation, and settle proportionate price variances to period end inventories, roll up single level and multi-level price variances throughout the production process and up to the sale of product. So this is the product costing in SAP. Cost center 1, manufacturing cost center 2, and cost center 3. They are apportioned to, they are assessed to production cost center, and from production cost center again it is going to as activities to routing. Through routing it is going to production order, and raw materials are posted to bill of material through bill of material to production order. Then the inventory has come.
Hello.
Tell me.
Sir, can you explain a little bit about the pricing policy, because you are using standard and then the variances are adjusted on a periodic basis. How does how do you arrive at the pricing policy, and any adjustments are made to the pricing in between or something
Pricing
like that?
policy for sales?
Yeah.
No, our cost we will not consider. See, it is only a benchmark, or it is a guiding factor for determining the pricing. Pricing will be based on the market only. See, at the end of the month, whatever costs, actual costs are determined, we will give it to marketing. So based on that, the market price and this cost, they'll compare and they'll fix the prices. For the month average only, we will consider.
And while speaking about the inventory or material ledger, just now you said that the differences in the cost will be adjusted during the, on the overall quantity of the inventory.
Yes.
So all
If
this will go
stock,
to the marketing.
the price difference, suppose 100 rupees price difference is there. Suppose 10% is in the stock and 90% we have consumed. The price difference, whatever 100 rupees is there, that in the ratio of 90% to 90 to 10%, it will be apportioning, and it will, consumption will be debited by 90 and inventory will be debited by 10.
The 90% whatever has been debited to the consumption will be informed to the marketing.
No. It will be
I'm just taking an example.
It will be assigned to product.
That will be assigned to the product.
Product which we have produced.
It will be added to the cost of the product.
Yes.
And that average cost is informed with the marketing.
Yes.
In an overall manner, I am talking. I am not just talking about the inventory.
Yeah. Correct. You are right.
So the price and the cost, they do not have any direct relationship.
See, our steel is a market driven this thing only. It is not based on the cost. Same material, private parties can sell at a different rate, and public sector units will sell at different price.
Okay, thank you.
So this is the pictorial explanation. So bill of materials and activities and overheads and how the steel cost is Right, sir?
Sir, I have small doubt. In process, there
Yeah.
is a three process cost centers are there, no? Each
Yeah.
process center will be create only one order for entire process, three production process orders, or each process order should be have a separate order. It's a combined order.
Come back again, sir.
In process, there is a process cost and production cost center 1, 2, 3 is there. Like
Yeah.
each production area is there. Now we are creating the production order for entire three production process single order. It will be there, or each process order separate order, sir.
No, no, no.
Stage to stage.
I create production order for each product.
Each product.
Each product. Suppose
So,
I have two bar mills.
Okay,
Hello.
sir. Okay, sir. Continue.
I have two bar mills. One is called LMM bar mill. Another one is called SBM.
Okay.
Right. In the two bar mills, same product will be manufactured. Suppose 8 mm rebar. Example I am telling. Or let us take a WRM wire rod mill. In wire rod mill 1 and wire rod mill 2, same product 8 mm rebar will be produced in WRM 1 and 8 mm rebar is produced in WRM 2 also.
Okay.
Right. I will create two production orders for that.
Each
One
product
for
level.
one
Based
for
on product
WRM 1 and one for WRM 2.
We are in the same process, sir. Not the same industry. It is a different industry. We are also maintaining the same line. That's why I'm get a
Yeah.
confirmation.
That should be because the costs in then only you can compare. No, see, SBM is a new product. SBM is a new mill which has advanced technology and which has higher depreciation.
Okay.
Because it's a new one. Bar mill is an old
we are
one.
also same type, sir. The material is same, process is same, but SKU will be changed. So,
Yeah.
will be little bit correction.
So we are
Each
creating
product-wise
production
will be
order.
production.
We are creating production orders at a product level.
Okay. Okay. Understood, sir. Thank you. Thank you.
But if you see hot metal, we have 3 furnaces. Blast furnace 1, 2, 3. But all the 3 produces only one material. That's called hot metal.
Okay.
Right. So though we maintain 3 production orders, the output will be one only.
Okay.
Right.
Okay, sir. Thank you.
Yeah. This is the metal ledger screenshot. I have erased the figures. It looks like this. The hot metal period 12/1. This is for the total full year 21-22 financial year. The green indicates that costing closing entry is completed. That means metal ledger process is completed. And the beginning inventory will be there. This quantity, preliminary value, price difference, actual value, and the price at which beginning inventory is there. And receipts production, how much is happened, and what rate, and what are the initial standard cost, what is the value, price difference, and actual value and price. Like that, and when it is used for the subsequent process for the hot metal, no, for making liquid steel, how much is consumed in the consumption and how much is poured to pooled iron and the closing inventory. This is how it shows. Right, sir? Now we will take that question. Product cost, each product, how it is costed. Hello? I think someone has asked about this one, how product cost is determined.
Yeah, I'm very much available, sir.
Sir, Can you repeat once again, sir, that one? Or is it clear now?
Yeah. In fact, I asked how the product cost being arrived by Vizag steel plant. This is what I asked.
By Vizag Steel. This is how
Yeah.
for each product, one production order will be there. Their
Yeah,
input, output, bill of material is there.
Got it, sir. Got it, sir.
Okay. Thank you, sir. And when it comes to cost accounting record rules, in 2011-12, the cost records are mandatory for the steel industry. Before that, these rules were there for mini steel plants. That mini steel plants rules were extended to integrated steel plants also in 2011-12 by this cost order. Earlier that 233B 1956. Now under section 469, central government to make rules and carrying out the provisions of this act. These rules were made in 2014. The rules consist of short title and all these things. This is one and the same for all the industries. It is same. Yeah, there are tables. A, B tables are there. The core industries and the non-core industries type. These are all the rules. Every company which the turnover is there for 35 crores, they have to maintain the records. If turnover crosses 100 crores, steel comes under table B. If turnover is crossing 100 crores, the audit is applicable. And if aggregate turnover of individual product is crossing more than 35 crores also, cost records are to be audited. And these are maintained in CRA 1, no specific format. And whenever cost auditor is appointed by the company and approved by board of directors, the same is to be intimated to government in CRA 2. And cost audit report once and along with annexer to cost audit report in form ABC is to be submitted to MCA. CRA 3 is not there, only CRA 4. After filing only it is to be intimated. And the annexer to the cost audit report is to be approved by board.
Can I ask one
So,
more question?
Pardon.
In from SAP, what type of reports will be download from for prepare the cost records and the cost audit purpose?
SAP cost records. Okay, sir. We will come in.
Annex to the cost audit, right? You have to be maintain the.
That's what. I'll after completion of this one we will discuss, sir. I have noted down.
Okay. Sorry about this.
The products covered under audit of steel sector are these things. Our CTA is 7201 steel. These are we almost some 28 CTA codes are there. Steel as well as the byproducts also there. Mineral fuels like crude tar, heavy crude benzyl, HP naphthalene, and inorganic and chemical industries like CG, benzene, toluene, argon gases, and ammonium sulfate fertilizers. So these are all the CTA codes. For these many things, we are preparing annexer and that format ABCD are there, no sir? We are preparing those things. So what cost audit record rules and audit rules, they are same for all the industries, but specific to steel plants, what are all the points? Just I am discussing here. In integrated steel plants, up to hot metal stage, it is a single product. So there we have a capacity utilization set hot metal stage, and hot metal to liquid steel, where grade of steel is decided by addition of ferroalloys. So from hot metal we make liquid steel, and here liquid steel it will be, for example, it will be bifurcated, divided into 100 grades. So from one hot metal, there will be 100 liquid steel items will be there, like IS 2062, IS 7887, SI R104, all those things. Like that, some 100 grades will be there. So each grade is a product. Then liquid steel is casted to casters, means CCD, continuous casting departments, for producing the crude steel. Again, same whatever grade liquid steel is there, output also will be bloom also of the different same grade, but different sizes. Right, from one liquid steel, there we have blooms of 250 size and 320 250 size, and 150 and 200 these sizes. So same grades will be again divided into some 4 sizes. It will become it becomes 500 products. And semis blooms are reheated in furnaces in mills, billets, bar, wire mill and structured mill. Then it comes again 1500 products. These 500 will become 1500 products. So the capacity utilizations in these formats CRA 3 and all, there is what is the installed capacity, what is the actual production, and the ratio of installed capacity utilization. That need to be given in the CRA 3. But we have only installed capacity at hot metal stage and liquid steel as a whole stage. And blooms, billet, bar mill at a mill level only capacities are there, not at product level. So CT-wise capacities are not envisaged in the designs. CTA covers more than one product for different mills. Suppose, as I explained to you earlier, same WRM1 and WRM2. But two different mills have two different capacities, but same product under the same CTA code. And it's not practicable to provide installed capacities at CTA level. That is why what we are doing in CRA 3, under each format, we are writing under that star mark, we keep it, and we write installed capacities are not available at the product level. That note we are doing. Even government, when they asked our opinions on revision of cost audit report rules, we have written this one. We have requested them to remove that one. And it is better to incorporate this is regarding installed capacities, and we requested them to incorporate a new para for reporting industry specific important techno-economics with steel trends in order to assess the company's strengths and weaknesses. So in steel, all the steel plants, what are the technical parameters they compare is, what is the fuel cost per ton of hot metal? Fuel includes metallurgical coke and pulverized coal. So how much they are using per ton of hot metal? And iron bearing metal, iron bearing charge. How much sinter they are using per ton of hot metal, and how much pellets they are using, and how much sized iron ore they are using for a ton of hot metal. So these are the parameters. If these parameters are there in the cost audit annexures, then government can have some idea which steel plant is doing well and which is not doing well. So for that, we requested them to incorporate this.
So one question.
Yes, sir.
This installed capacities, you can't have product wise, but you can have mill wise, no? Mill wise, or say process wise, blast furnace.
Mill wise is there, sir. That is what I am telling. Suppose I have WRM1 and 1 and 2. 2 mills are there.
Yes.
WM1 I have some 8 lakh capacity. WM2 has some 8 lakh capacity. But
And the
the
actual
thing is,
production, you know.
huh?
And the actual production
but
also, you know.
but this 8 lakhs, it is not an 8 lakhs whatever capacity utilization is given. In that 8 mm is how much? 10 mm is how much? 12 mm is how much is
No,
not there.
in terms of tons, you can give, no?
No, but in terms of tons and the carbon percentage, CTA is changing, no, sir.
Acha.
CTA is changing based on the chemical composition. CTA is changing.
Yes.
That is why that
So
problem.
perhaps a group of CTAs you can give. I don't know.
Yeah. For that group of CTAs also, it is not possible.
Acha.
Yes, sir.
Okay,
Not
okay.
possible. For altogether, see, suppose in one mill there are 5 CTS. For 5 CTS together we can give. There is no problem.
That's what I'm saying.
That we can give. That that is yeah, that is only mill wise only.
That's what I'm saying.
That way you can give. Then CTA wise cost sheets. Somebody asked SAP me what cost reports you are getting. Hello?
Continue, sir.
SAP cost records. So we are getting product wise cost sheets can be drawn from ERP SAP data. But the thing is, SAP is not user friendly in the from the point of view of reporting. See, data is there. Only thing you have a raw data. Again, you have to take that data into the Excel and you can tabulate.
Yes, sir.
Right, that is only there. But in HANA, I do not know. We are not working on that. But only thing
In
we
HANA,
are going to implement.
Sir, I'm working on HANA. Generally, monthly will download the data like a COIS, one T code is there.
COIS is the production order list.
That is, there is a actual quantity will get the each process order. That will be consolidated and give the cost sheet.
Yeah, that is what. No. We in ECC itself we have some we have some G developments we have done, and from there we will download product wise cost sheets will come. See, for each product production order there will be order type. Right. Suppose in LMM I have 100 products. These 100 products, 100 production orders will be there. For the 100 products production orders, one order type only. So based on the order type, I can take out data from the ECC and I will prepare the product wise cost sheets in with SAP data. And CTA is a combination of different products. And one CTA consists of different products from different mills. So now first, initially I will take production order product level cost sheets, and these production for each product I have inserted a tariff code. Tariff code is nothing but a CTA code. So based on that CTA code, based on that code, I am consolidating and product wise data we are sorting based on the CTA code. Product wise data is to be sorted based on CTA and to be worked out for CTA wise cost sheet. Got, sir? Normal cost sheet data is there with me. So whatever I am producing for the production, for the product, I have a tariff head in material master. So that based on that material tariff code, I am sorting out. Then I will get CTA level production order, CTA level cost sheet. And as steel sector involves series of processes, CTA-based data extraction is a challenging task and time consuming and duplication of job for cost accountancy. One I am doing for each product wise cost sheet I am doing. mill-wise cost sheet I am doing, and in addition to that, CTA cost sheet also I am doing for the cost audit purpose. So this only I am commenting that it is a duplication of job for cost accountants working in the costing section. But what is the value addition for this CTA-wise cost sheet? What company will get?
Just for fulfill of cost audit obligation.
That is a statutory obligation, that's all.
Yes, sir.
If it is product level, same thing. If it is, if cost audit is a mill level or product level, if they ask, then there is a uh, uh, there will be some value addition to the company also.
As per Act also, sir, as per cost records, you have to maintain for each product wise only, sir. For
Product wise only.
Product only, but reporting of CRA enacted to the cost audit report, you should provide the data in SATA code level. That is the
Yeah. That is what. And the conclusions for my presentation is like this: maintenance of cost records and audit are absolutely necessary for efficient resource utilization, as well as cost accountants. We are believing this, as well as monitoring and improving the efficiency of organizations, leading to overall productivity and profitability improvement in the best interest of consumers, investors, workers, and industry, and the general public. Cost audit is based on the economic principles and resources that should flow into most remunerative channels. Cost audit measures the parameters indicating the effective efficiency in the utilization of financial, physical, human resources. Cost audit brings out the weaknesses in the internal workings of a company. That internal working weaknesses in internal workings, if it is product level, anybody can understand. At CTA level, internal people cannot understand. Maybe government may be understanding that for the CTA, how much tax is to be levied. For that purpose, they may be requiring this data.
Hello.
And sir, hello.
Sir, regarding this system code wise reporting, what you are just mentioning about. The draft report which came about a year and a half back, it was reviewed by the finance ministry.
Yeah.
The summary of the report, they specifically expressly mentioned that the HSN code wise reporting is of not any use. They have already noticed it and put it on the record.
Yes, sir. We have also given from our company side also we have given
and
that.
From whatever you say about the industry, just now what I have understood from your enlightening, it is only a cost center wise or a production center wise cost sheet, and which are converted into different product cost sheets ultimately.
Yes.
So that is what is to be embedded in the report also, because if you want to highlight the key performance indicators, you can go only mill-wise.
Yeah.
Mill-wise
and this techno parameters also, it will give us some idea about the company.
Yeah. Overall input-output ratios.
Industry norm is this. Industry norm is this, and this company is performing like this.
Ayan bhai, can I ask you something?
Yes, sir.
Regarding the information what you have enlightened on us and about the steel is that how the BOMs are standardized, all the cost centers are based on, all the incidences are standardized based on some drivers, which you will charge initially, and later on you will calculate the variances and arrive at the actual.
Yes, sir.
I'm interested to know if it is possible for you, what are the measures taken in your industry for monitoring and control of costs, by and large, not in minute level.
Yeah. See, at any just let me complete it and I'll come to that, sir.
Okay.
This is the last slide, I think. Cost audit provides more accurate data as regards the cost of various items and the quantity of materials consumed, thus helping in the proper computation of variances and hence productivity. In a nutshell, cost audit covers efficiency, performance, and propriety. Right, sir? So now, sir, I will take your question. So, because of the SAP ERP systems, instantly I will be knowing what is my inventory position. At any point of time, by logging into the system, I can know what is the inventory. So if a company maintains its discipline, that means whenever goods are received, immediately if it is accounting, and whenever goods are consumed, if it is accounted, then you will know your stock levels at instant click of the time. And what are the cost reduction measures? Cost reduction means every time even in between of month also, people will be asking us what would be the cost. Suppose this month we are expecting productions will be increasing like anything, or we are increasing some 10% of production. What could be the cost of my final product? So those reports we are able to provide to the management.
Yeah, but according to what you said, I understand your initial bookings are all based on DOM basis or on the standard key parameters.
Yes, yes.
And suppose if we in an intermediate, in an intervening period, like one fortnight is over in the month and another fortnight is pending, and you are asked to.
No. We are, sir, in SAP, whoever implements SAP, they are invariably, they should be a very disciplined persons. They should invariably by third of the month, I have to close all my production orders and TECO is to be completed. Once third, they gives me the confirmation of closure of the completion of the TECO. I will not allow them to pass any entry of the previous period.
Okay.
Right. Once my accounting sections confirms me that their accounting is completed by 5th of the month. After 5th, I will process the costing run, and it takes 1 day. And by 6th, after costing run is over, I will not any of the user to pass any entry of the previous period, except some clearing accounts.
So by end of first week, you will know what is the actual cost. You mean to say?
Yeah. By 6th or 7th, we will know.
And what are all the variances also, it will be reported.
Yes. Compared to previous month or compared to previous year, whatever is required, we can.
The variances will be posted in the last day of last month, sir. If you run the CKML, if you run some month end cost, actual costing, the date of posting will be select like a month end. That will be happen in the month end only, na? Variances.
Yeah. Average for month end only.
Yeah.
I am looking after my cost for the month. I am not looking after the cost per day.
Correct, sir. We can't go day wise. One is the best report in SAP, that COISPA, the documented goods movement on option is there, sir. In that you can from 1 to period finish date, you can give in the bottom. It will be run, it will be the entire month production order with a product code and what the activities utilized. These are all quantitative and yield analysis, everything it will become in the report, sir. You can make a pivot in Excel, it will give the summarized report to the member.
Yeah. The material ledger, what I liked much in SAP controlling model is the material ledger.
Yes, actual material.
It is actual material costing. It is very, very beautiful thing. We have almost working on this for the last 10 years, 2015, almost 10 years. And a lot of problems. And the only thing it says it gives you a symptom. Only thing you should, like our body, it gives you symptom. Only thing you should analyze and diagnose what is the problem. Similarly, this material.
I have also worked in the big MNC like a Siemens, Schneider Electric in SAP, sir, pure controlling mode.
Okay.
Say I got some further on that. Okay, sir.
Okay.
Thank you very much, sir.
Okay.
Any more questions, please?
Now session is open for questions, for further questions, I can say.
Hello.
Hello.
Hello. Hello. Good evening, sir. I'm Dilip Bhatija. I want to ask one question. In the
Tell
steel
me.
industry, many joint products and byproducts also come out. Say, for example, companies manufacturing the ingots. So rises and runners come out along with that. So how do you do the costing of that?
Yes, very good. See, in the beginning of the our presentation, I said that coke oven gas is the byproduct
बोलिए
of. Hello. Somebody
Please
interrupting?
continue.
In the beginning of the presentation, in the second slide or third slide, coke oven gas is the byproduct while making the BF coke. Right. See, the coke oven gas,
बराबर
you are asking how it is valued, byproducts, how they are valued.
Yeah, right.
We have a standards are there how to value the byproducts. The byproducts are to be valued at
वो आपको देखना
the.
पड़ेगा वो अजय अंतर करके
Hello. For example, CO gas is there. CO gas, it gives me some calorific value.
और
Right.
मेरा साइनिंग डेट क्या आ रहा है
Yeah. Someone has kept its mic open.
Yes. Kindly mute.
Sir, I have done that.
Okay. So CO gas, it has a calorific value. The boiler coal, whatever I am purchasing from outside, it has a what is the how to value my CO gas? Only comparison is calorific value. How I will get calorific value? Suppose if I purchase that gas from outside, I am not purchasing gas from outside, but the equivalent thing is boiler coal. So boiler coal I am purchasing for producing my power. So I am equalizing boiler coal price with the calorific value of the CO gas, and that rate I am applying for giving credit to my CO gas.
Okay.
Right. Likewise, I am getting another byproduct I am getting is crude tar. Tar I am selling outside. So that net sales realization will be there. That I am giving as a credit rate. Similarly, in blast furnace, while molten metal comes out, same way, granulated slag also will come. That granulated slag we are selling outside. So the net sales realization of that granulated slag we are taking and we are giving credit to the blast furnace hot metal cost.
Okay.
Similarly, suppose scrap is there. Scrap valuation we are having a hot metal or some pig iron is there. So for the pig iron cost, 90% of pig iron cost I am assigning it to steel scrap. With this steel scrap, I am giving with 90% of the pig iron cost, I am giving credit to my steel cost. This is how the byproducts are valued.
Okay. Thank you, sir.
Sir, his voice is audible?
Yeah. Tell me, sir.
Actually, sir, I want to understand that how you compare the cost of raw material consumed with financial raw material consumed. When we arrive cost of production from cost of raw material cost inclusive of cost of production, how you reconcile with the financial cost of material consumed? It means in product we have a lot of expenses or whatever it is. When we consider as a BOM, bill of material, you explained very well in that PPT. In BOM, we considered certain raw materials. That raw material, how we compare or how we reconcile with the financial statement? Is it with the system? Is there any report, system report? Just I want to understand, sir. Thank you.
Raw material consumed with the FI records. how it is reconciled,
Yes,
isn't
sir.
it?
Yes, sir.
You have movements, no, sir. You know what is the actual price for the raw material, how much you have consumed. Consumption will be based on some what do you say, movement type. Suppose production order consumption will be with 261 movement or 262 movement. Those things only consumed. Suppose 10
Yes,
raw
sir.
materials are there for a period. So you take MB51 में that report you take, and in CKM3 you have actual cost for that. That too you can write one program, one T code also for that. CKML HD and
Sir,
CKML CKP, some T code, some tables are there. There you will get PUP. What do you say? Periodic unit price. That price will be available, and quantity also will be available.
Okay.
With that, it should match.
Actually, sir, when it will be matched, when the
Yeah, when you complete
quantity.
your cost, when you complete your material ledger.
Okay. So even
After
when there
material
is a
ledger, it
price
should match with
variances.
your FI.
Okay. When any price variances are
sir,
there, only quantity variances is there, whether
Along
it
with
will
that
be.
only it will come. See,
Okay.
price variances. See, when initial when 261 movement is there, it will be booked to one GL. Okay, consumption of so and so X materials debit, right? Then the price difference of that it is booked to some other GL. So if we add those two GLs cost, two GLs amount, it will match with your FA records. Got
Okay.
it,
Okay,
sir?
sir.
Any
Thank
doubt?
you. Yes. Yes,
sir,
sir.
at the
Thank
time
you.
of
Thank you, sir.
completion of process order, have you update the actual consumption each order wise, or standard wise only it will be booked the actual?
No, consumptions will be based on actuals only, sir. But
How
at
it
standard price.
is a continued process. How can you can't weigh the material
That's
issue?
what I'm telling. For each month, one cost center, one production order will be there.
Each product 1 month, one order is there.
One product, one production order for 1 month.
Okay. Okay, sir.
Sir, good evening, sir. Sir, I
Tell
have
me,
one
sir.
doubt regarding roll-up single and multi-level price variance throughout the production process up to the sale of product. Can you elaborate this one, sir?
Yeah. Actually, this is only the beauty of material ledger. See, when the price differences are booked at 3 different stages for a product. First, when production order, when you purchase material, when at GR time, when at the time of MIGO, the price difference from production purchase order PO price and standard price, the difference will be booked to price difference account, right? Standard price and PO price difference will be booked to PRD, price difference, right? The second price difference is at Myro time. During Myro time, if there is a difference between PO price and invoice price. Hello?
Okay, sir, I am listening.
Continue.
Then invoice price, if there is any difference between invoice price and PO price, the delta will be booked to price difference. The second price difference. The third price difference.
Miro price should be in line with PO, na? You can't deviate the PO price.
No. Suppose if something is not defined in PO.
And generally, it will not allow. It's a
Generally,
minor correction only can allow.
generally it should not be. But if there is some revision is there, or some discount is allowed after PO.
Okay. That PO should be amended.
Not
PO
only that,
should be amended, or invoice they'll deduct it.
some freight charges like that also it will influence.
Will be there. So that time also some price difference can come. It may be rare chance, but it will come there. It will be accounted as a price difference. The third difference is the production order difference. Production order actual quantities with standard price and actual activity price. The difference between input and output will be settled to the product, the receiving material. So these are the three price differences, right? The raw material price difference will be rolled up to SFG, and SFG price difference will be rolled up to FG through material ledger process only. That is the single level, multi-level. At raw material stage, whatever price difference is there, that is the single level product, single level price difference. And when it goes to the next process, that will be a multi-level price difference. Raw material used in the semi-finished, that price difference of raw material will become a multi-level price difference for the semi-finished. Got it, sir?
Got it, sir. Thank you, sir.
Right.
Any more questions? I guess no more questions, sir. Can we conclude the session? Hello?
Sir, one question, sir. So how coke is a fuel, no, sir, generally? It is how it is the part of this one material
raw
cost.
material. How it is a raw material cost. So it is the industry practice that because it is almost your 50% of your cost of production is that only. So without coke, I cannot make steel. So that is why they are grouped under this one. Again, if it is a boiler coal is used in the production of my power. That we have grouped under power and fuel. It is not raw material.
How the car sometimes say that one in steel carbon content like that. Is that way make it as a raw material?
Carbon content steel will contain, see, 80% is 80%, more than 80% is carbon only in coke, no?
Okay. Grading also done by some of the grading is done by carbon also.
Done by carbon percent. The CTA codes are like that only. CTA codes 0.5, 0.05 to 0.15 if it falls under one group, that is given as one SETA code. If it is more than 1.5, it is another SETA code. SETA codes are defined based on carbon percentage only. One of carbon percentage is also one of the consideration for SETA code.
Thank you, sir.
Yes, any more questions?
Sir, this PPT will be available, no?
They will share it. I will send it.
Thank you, sir. Thank you.
Excuse me.
Can we conclude the session now, sir? Hello?
Hello?
Sir, I think no more questions. So can we conclude?
Yeah, you can conclude.
Yeah. On behalf of Professional Development Committee of Western India Regional Council, I thank you, sir, for your thoughtful session. I also thank all the participants for joining the webinar. And now we officially conclude the session. Thank you, sir.
Thank you. Thank you for giving me the opportunity.
Next webinar will be on 26th of December, next Friday. On sugar industry.
Thank you very much.